selling flows overwhelm Bitcoin and prices briefly dip below 60K. Ethereum holds up better on anticipation of next week's ETF launch, and option flows remain positive despite weaker price action. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT again, as always, in the studio. Now, we're excited to announce the winner of our recent giveaway last week. We had loads of fantastic participants and appreciate all your support, comments, and enthusiasm around the podcast. The winner of the free Deribit sweater that I was wearing is @TokenWolf. Congratulations, my man. Or lady, I don't know, obviously, a lot of crypto anonymity going on. We'll get in touch with you about the sweater. Anyway, on to the episode. We tested the lows, or the lows of the range, and we seem to be holding in there for now.
Yeah,
what do you make of this?
Yeah, it took that little dip, quite short-lived dip below 60K. I didn't like it, sort of bounced back.
There's quite a lot of selling going on though, right? From different pockets.
Yeah, there's a few. Yeah, there's a few negative sort of flow dynamics going on right now. We had news that the German government are selling some of their Bitcoin. That
they're going to regret that in a year.
Yeah, I know. I know. It makes me laugh. All these governments with all this debt, and you're probably selling one asset you should probably be holding.
Interesting.
Do you remember when Gordon Brown sold all our gold?
Yeah, that's right. That's right.
So,
I guess the question is, who's the smart government that's actually buying Bitcoin?
At the moment, they seems in emerging markets.
Yeah.
El Salvador, probably Argentina going to do it. Sounds like Trump's going to do it if he comes in. Can you imagine what that'll look like? But no, you've had quite a negative flow dynamic. German selling. We've still got, I know sort of James Van Straten, when he was on, was talking about, post-halving and some of the minor capitulation. We still probably got some minor selling, as obviously they're less profitable post-halving.
So the cost of production for miners, and I mean, I read recently that was around 60K. Is that right?
It sounds about right. Yeah,
quite high. Right?
Yeah,
cost of production.
Obviously, like electricity prices and all this stuff's high.
Yeah.
And now obviously your revenue, if you want to call it, that's like halved. So
yeah,
so some miners will be selling to go and sort of buy new machines and what have you. So some are just trying to pay bills. So that sort of tends to weigh, which is quite typical, like post halving as well. But
I guess my question would be, if we go at 50K, for example, right, which is not out of the question, do a load of miners go out of business?
Yeah, and you're probably seeing that.
Yeah.
So you'll see some consolidation in the space. We've already seen that. Some of the bigger miners sort of buying out some of the other ones, or existing ones that are struggling are going to have to find cheaper sources of energy and all this sort of stuff. So that tends to play out a bit. You see hash rates tends to fall. Actually Willy Woo, I don't know if you follow him, he's sort of written some good stuff around that, in terms of waiting for the hash rate to start picking up as a sign that we've probably bottomed out in this consolidation phase.
Mt. Gox is the big one though, right?
Mt. Gox. So yes, I think sentiment wise, and actually that story broke, I think, at a time when sentiment was really, really weak. And it typically, for me, is almost like the sign of this is probably the low.
The crescendo.
Yeah, it's like you need that last flush out, which is kind of what I felt what we got. But yeah, the Mt. Gox stuff, they're what?
Have they actually sold already, or are they just going to sell over the? Because it's going to start distributing payments in July, right?
Yeah, but it's in-kind payments. All right, so this is the important thing. We were discussing this at FRNT internally.
Right.
And the guys there got quite a good handle on this stuff. So there's about $8.5 billion worth of Bitcoin being distributed, essentially.
Oh, but they're not selling the Bitcoin; they're just distributing.
Yeah. So it's in-kind transfers. So it's quite an important distinction, right? If Mt. Gox are having to sell it and then distribute it,
I thought that was
no, they're distributing the Bitcoin,
right?
So
So the people who they distribute the Bitcoin back to aren't necessarily going to sell the Bitcoin.
No, now some will, obviously. And by the
Yeah.
way, you've been holding this, what, since 2014?
Oh, so you're massively in the money.
Yeah.
Okay.
So some are obviously going to sell it, and it'll probably be quite.
You actually should thank Mt. Gox for making you hold it for
Yeah,
so
no,
long.
the major hodler. but the other thing, we think any significant holders would probably have hedged already. So there'll be, even if they, they'll be maybe selling out the spot and unwinding the hedge, or
I see.
So
it's not necessarily a massive net sale.
It's not. No, exactly.
But, yeah, interesting.
So it's probably overdone, and then like you say, those who didn't bother hedging, they're probably hodlers in a way. And then again, at what point do they sell? So it's not like you're going to have 8.5 billion of Bitcoin just get smashed the market in July.
Okay.
But nonetheless, that will,
that's comforting.
That there is Bitcoin to be sold, no doubt, at the margin. And it adds this negative flow dynamic. We've also seen that negative flows on the ETF side. So we've seen outflows for the last.
But are they not? People are saying a lot of that is people unwinding the arb trade, right?
Now, yes, like that's definitely the case. Again, it's probably the outflows probably aren't as large as they seem, but then
the inflows weren't as large as they seem.
Yeah, that they wouldn't. Yeah, so we have to kind of keep that in mind. But again, at the margin, there's probably some selling, some profit taking, and generally as well, like we've still got some of the whales that are taking profit as we get into that 70K area. So all those things combine, it's just almost like a perfect, just a way. And then the other thing, I can't get away from not talking about China. I think we were talking before we came on here. I wake up now and I just see where dollar China's trading, and I kind of know probably roughly where Bitcoin is.
You dream in Chinese.
Yeah, exactly. But so obviously we've got, from a macro side of things, we've still got this like relative policy divergence whereby the rest of the world is kind of slowing down, inflation under control. In the UK, headline inflation is back to 2%. So
finally,
back to
we're going to get a rate cut.
Rate cut looks like it's coming in August. The S&B surprised the market with another 25 bip rate cut. Obviously, the ECB have gone as well already. So, sort of major central banks have started to cut. And the Fed are kind of getting that. I still think the market's underpriced for Fed cuts. But we keep getting this kind of mixed data. So last week we had like retail sales that was really weak, and it kind of points to this softening consumer. And then we got some PMI data that actually showed services look like it maybe have rebounded. So there's just no like continuity in the data flow. And it keeps, for a Fed that's quite nervous about making another mistake. I think the mistake is that they're behind the curve on getting this rate cut cycle underway.
So what's the consequence of that sort of mistake, though? Let's say they are too slow in cutting rates. So that means the economy tanks a bit quicker than they want it to?
Yeah, the slowdown is sharper than
but then won't they just cut rates faster when they finally get that signal?
So that means they're going to end up cutting faster, quicker, deeper, and all the crazy shit that they do with QE and all that stuff comes back on. So in a weird way, their policy mistake, and again, Bitcoin is the ultimate hedge against, the policy mistakes within the traditional system. So
I'd say those policy mistakes being new and old policy mistakes, right?
Yeah.
The debt, the amount of debt there is due to the poor policies previously. Mean that Bitcoin can only go higher over a long enough period of time. Right?
Exactly. And when this is like someone who's like very big picture, I sit back and look at this stuff and I'm like, we obsess, we hit 60K and are we going to get a flush down lower to 55 or have you? And, it's just everyone relax because it's
Zoom
like
out 10 years.
Yeah. And these cycles just play out. Every Fed cycle plays out the same way, stay too low for too long. And then they stay too high for too long because they're always looking at spot data. Like they're looking at like the current data flow, which by nature is backward looking. And then I don't think, take into account the lagged impacts of policy, which is like 18 months to 2 years. So, if they cut now, if they start cutting now, you're not really going to see the impacts of that for another like 18 months. Like really.
Yeah.
So, I mean, fortunately the market kind of starts to ease before they will.
It kind of forces their hand, doesn't it?
Yeah, and in terms of real market impact, in terms of cost of being able to finance debt through capital markets and all this stuff, it's based off of like market rates. But obviously, the Fed rate is the kind of like anchor to or baseline to that.
But rates have massively, sold off effectively because the forwards were all pricing massive rate cuts by now.
Yeah.
And they just haven't transpired, right? So that's effectively, you know, that's as if it's as if bond markets and rates markets have been selling off, even though the rates have kind of stayed still, right?
But what I think one of the big consequences of them being behind the curve, and I think you're starting to see this priced, is you'll start to see long end yield. We're starting to see the curve inversions again, right? And I think that's a market going, right, this is going to impact, like we're going to have a weaker growth outlook. So 10-year yields start to break down. So yeah, I think we continue to see it. I think it's what's the level in 10-year? 420, yeah.
420-ish.
I think that breaks, and quite quickly at 380. That's going to be a massive tailwind for crypto.
Right.
Because as well, you know, we think of crypto as what we call a duration asset, like a long duration asset. Tech is that, you know, NASDAQ is kind of a long duration proxy because the cash flows are kind of delayed. Obviously, there is no cash flow with Bitcoin. So it's like the ultimate long duration.
There is if you sell calls against your Bitcoin.
yeah. There's ways to generate cash flow, but yeah, in and of itself, you know, Bitcoin is the ultimate long duration asset. So I'm actually looking for long duration to really start performing. You're kind of seeing it in NASDAQ, which we keep making record highs.
NASDAQ's had an amazing run, but obviously Nvidia had a bit of a correction over the last week. But it was up 6-7% yesterday. So I don't know how long that correction is going to last, right?
Nvidia for me is almost kind of reminds me of like Bitcoin itself, actually, because market can't get its head round an exponential trend, which I think Nvidia is. Like I'd be buying it all day long, because you know they're struggling to keep up with demand already, but the demand is going to grow exponentially, like for their product. So I think they're going to be constantly be sort of chasing themselves, and because the whole AI thing is just exploding. So until there's sort of more competitors to what they do, they're just in this explosive, like exponential phase, and it's the same thing for sort of Bitcoin and wider crypto. And it's really hard to get your head around exponential trends because we're so used to sort of mean reversion and all this stuff. So yeah, so it's been, we said last week, you know, we need some patience. I think at the moment, whilst we're in this range, we're still in a range. Like we're back to levels we were just a few weeks ago. Struggled obviously to make that 70k. Month and quarter end as well this week, so there's a lot of noise around that. Also as well, I always think like the month and quarter ends, those weeks tend to be negative liquidity. Like you tend to see like the RRP go up, and there's all this window dressing and stuff. So it's not money's not flowing, if you like, into those periods. And then again, going back to the China thing, so they're obviously still having to defend their currency. What's quite interesting, they've started to weaken the peg. Now it's kind of, so it's almost like this crawling peg. So they're not devaluing, they're not going outright devaluation. They're doing this kind of slow crawling peg, but they're still trying to, you know, keep the intervene to kind of strengthen their own currency. Now, a couple of things with that, we talked about, like, I think they also are incentivized to keep a lid on Bitcoin. But then also, when you're reducing your FX reserves, you're selling down your FX reserves, like your dollar reserves, to essentially buy back your domestic currency. That's also a liquidity tightening that kind of reduces the money supply. So that dynamic, I think, needs to resolve itself. But the more they start to do this, like I always think, if you're going to let the currency go, just do it in one big hit, like just rip the Band-Aid off. Because all that's doing is, if you're domestic Chinese now, you're just going, right, the currency's getting weaker and weaker, and it just speeds up the capital outflows. So
you've got a chance to actually get your money out, whereas if they just quickly do it,
then
you're just like, okay, it's done now. I don't. I've taken my hit. I'll move on with my life, kind of thing.
Exactly. So, but you know, I think the whole time they're doing that's going to keep weighing. I think it's either going to resolve itself with they do just devalue.
So what happens if they devalue?
Well, last time they did that in 2015, Bitcoin prices tripled like within a couple of months, because just capital just rushes out at that point. So I think that's possible. The other side to it, the way this resolves itself, is that we start to more aggressively price in Fed cuts, and then the broader dollar sells off. I actually, from a probability perspective, I probably think that's the higher chance of how this resolves. But yeah, so we almost like we got PCE on Friday. We almost need another couple of week data points where the market goes, right, the Fed are going. And then we start pricing that. Broad dollar sells off. US yields are coming lower. And then you kind of, instead of this divergence, we'll have convergence. And then we kind of off to the races.
Something on the dollar that was interesting was Jim Bianco put out a chart saying the percentage of US people who want to go abroad for holidays in foreign countries has gone up massively. So like you look back, 10 plus years ago, the numbers were bouncing around 5 to 10% basically of US, right? Now it's like 20, 25% because they all feel so much richer on the stronger dollar basically.
Yeah.
Right? So just an anecdotal point of just how much the dollar has outperformed how wealthy Americans feel that they can then go abroad and everything's cheap.
Yeah, and that's, by the way, as well, that's how then you come back to an equilibrium, because then you will start seeing, if you think of it as demand for imports, will just increase, and then there'll be a lot more dollar selling and then a lot more demand for other currencies. So it will kind of correct itself. I think it will correct itself. That will start to price a much faster US slowdown. In fact, if you look at the economic surprise indices, they're at
they are rolling over, aren't they?
They're like not just rolling over, they're at like the lowest levels. Now that is, again, that's just a momentum type and tends to mean
it's a rate of change sort of thing.
But the data flow has been weak. I don't think the market is really properly priced for Fed rate cuts that are going to come. We've spoken about the weakening in the labour market and all this stuff. So we just kind of waiting for that spark for the Fed to kind of get on board and go, yeah, right, we're ready to go. And then I think dollar weakens. Obviously, at the moment, that strong dollar is another headwind to Bitcoin. So I think stepping back from it all, we're still in this range. I kind of think the lows are probably in, if I'm honest. We had that flush on all that news with the Mt. Gox and everything. RSIs look massively oversold as well. We're in that kind of month-end, quarter-end window, so liquidity should improve from next week. So I kind of probably think we're at the bottom end of the range, and yeah, we recover here. But otherwise, we look good. That there's policy easing going on. The Fed will start easing. The rate and liquidity outlook looks better. As we go into the second half of this year, we've got all the positive ETF news. We've still got the institutional adoption. You've still got the US running mind-blowing level deficits. I think the CBO updated their deficit forecast for this year from 1.5 trillion to 1.9 trillion. These numbers come out now, like you've nearly increased it by $500 billion to what we thought just a few months ago. It's mind-blowing numbers. They're debasing the currency.
What's another 3 zeros between?
I know, yeah. So just I wrote in my newsletter, the Connecting the Dots newsletter for London Crypto Club at the weekend,
which you should all check out, by the way.
Please do. But yeah, like the stack, sats, and chill. Like these are levels to sort of pick up. And I say, if you look at funding rates as well, there's no particular. We're pretty flat in terms of leverage and all that sort of stuff. So no signs of leverage. So unless there's some real kind of sellers out there. Once some of like those flow dynamics dry up, then we'll start going back towards the higher end of the range and challenging that 70k again.
Cool, man. All right. So this week I got a chance to catch up with Thinking Greeks, another very active trader in the crypto vol space. He's also pretty big on Twitter. Check out what he had to say.
Hey everyone, I've got another special guest with me today. It's an active options trader, Andrew from Thinking Greeks. How you doing, man? Good to have you on.
Hi, everyone. Thank you for for inviting me here, Imran.
No worries. So you're coming out of Italy, yeah?
Yeah, Italy.
Good stuff. So,
Il bel paese.
So tell us a little bit about your journey into the world of crypto options.
Yeah, I started I started with crypto in 2017, and then I started studying option in 2019. At the beginning was tough because, as you know, options are it can be a very complex instrument, especially in the beginning. You need to understand the multidimensionality of option. It's not just up and down. You need to consider up and down and also volatility, which is an entire different universe. So it took me quite some time to understand the instrument. Starting in 2019, I did a lot of mistakes.
That's how you learn, man. That's how you learn.
Yeah, that's how you learn. Basically, the first thing that I quickly understood with options is that you need to trade. Actually, start trading the instrument, because I bought some books. I was reading books, and I was not getting much when I needed to understand how to trade. I needed to touch the instrument to see how it behaves. Books gives you a lot of things that are useful, but my way is trial and error. So I had to touch the instrument, and I had the good results, bad results, bad results, bad results, bad results. And then
I agree with that.
I started to do, because you need to see how it behaves, and especially when you are on the short side, when you sell,
you need to feel the P&L.
Yeah, exactly. You need to see why things change, what happens in the market, and why things change, and why things change in a way that you were not expecting. Like I remember when it was during the COVID crash, I remember implied volatility going 500%, something like that, even on calls. And I remember that buying those calls, you think that you can buy a call and buy the dip, but with 500% volatility, you see the price bouncing back and your option losing value because the volatility is going down. You see these type of things that are crazy, that you have no idea how to handle in the beginning, because you are used to perps or just spot, and the things go up and down. And you enter this new universe, and you need to deal with so many things. So it takes a lot of time to understand, especially if you don't have a mentor, if you don't have someone that tells you how to do things. I did all by myself. It took me double the time. But when you do all by yourself, you spend more time researching, more time learning, more time doing this and that. And this, this somehow also a good way to learn things. If you're really committed to do that, if you really want to understand the instrument, because I saw a lot of people that start with option, they say it's too complex. Let's quit.
Yeah, I mean, I've done it for 20 years, right? So, or more than that now, I guess. But my goal at Options Insight has always been to try to simplify it, break it down into the kind of the layman's terms, right? I don't worry too much about black shoals. I don't go
exactly
too deeply into the theory. It's all about the practicalities of options trading. And for me, the way I like to describe it is, how does premium behave? What are the factors that are moving that premium of the option around?
Yeah.
And how do you think about them? And actually, once you get your head around it, whilst it's scary at first because of the multidimensionality of it, right? It actually gives you so many tools at your disposal to reflect your views. And you don't have to always have a view on the spot direction. You can have a view on so many different things now, and actually empowers you to do that. So that's the exciting thing about it. So
that's an important aspect. So sorry for interrupting you. When you have so many choices, if you have only one choice, it's simple. When you have so many choices, the first thing that was complex for me was to strikes the maturity. Oh my God, what I have to do? Why I can choose a 3,000 instead of 5,000 in the end of the month instead of now? Those things are complex because as you say, it's a multidimensionality, and you can do so many things that sometimes it's difficult to do something. So you have to you have to deal with these aspects. Once you get used to this type of multidimensionality, things become clearer, and you can start to do your things. So it's a very important aspect.
So I think, my question now to you would be, so what do we make of this market? We've been range trading since like March on Bitcoin. Yeah. Once again, retested the lows of the range, trying to hold it, quite a reasonable hold, right? Bouncing straight off 58 to 62K. What are your thoughts? Have you got strong opinions on direction of the market right now?
I have, I used to study a lot of macro things in the past, because I think you need to have an idea of where you are and where you're going. Now, I don't spend much time studying macro. I prefer to study trading things. But my idea is that we are still in a bull market, and in the second half of this year, probably also a couple of months in 2025, we're going to have like some type of second leg. So that's my main idea.
And is that is that thesis based on technicals? Is it based on
No, that's
macro?
It's based mostly on to me that there are some macro things that suggest me this type of that we're gonna experience this type of move. But also the fact that it's an election year. For me, it's unlikely to see a crash before the election. That's my idea. I could be wrong, but there are some things that suggest me this type of behavior. Right now, we have this June option expiration, which usually is not that. Sometimes you put a cap on the price. Sometimes it's not very good for price action, and I think we need to cross Friday before getting an idea. So probably next week we're gonna have an idea where we're going.
You've got the ETF for Ethereum.
Yeah,
that's launching next week, right?
That's an important thing because a lot of my trading, option trading, it's around this Ethereum ETF thing that we may have on the 2nd of July. They say that will be approved in the 2nd of July. For now, I don't have a strong idea on Bitcoin. I think that there is a risk for Bitcoin that Ethereum is going to suck a lot of liquidity and be the next trade. There is a risk that we may lose those lows because the pattern is not that good. But I don't have a strong. My opinion is stronger on Ethereum because I think that right now Ethereum has a catalyst to move and to outperform Bitcoin because Ethereum has underperformed Bitcoin for such a long time that if there is a chance for Ethereum to get back some of the space that it lost again, Bitcoin is right now.
But the counter I would have to that though is everyone knows about the ETF, right? It's not new news now.
No.
So what's going to drive it higher? Is it literally the inflows coming in and actual people actually purchasing Ethereum and it just have
exactly. we need that. We need inflows. We need people buying Ethereum. Maybe there would be a lot of interest. Maybe there would be none. We have no idea. But I think that Bitcoin had this catalyst. There was the ETF. We had some good ETF inflows. If Ethereum we get the same or close to the same, the performance will be really good. We have no idea. We can just speculate on this type of
So let's look at the vol side of it then. So like from what I'm seeing, there's still quite a lot of premium being pumped into the Ethereum vol.
Sure.
The market is anticipating a move next week, right? Or certainly a move over the next month or two. What do you think about that vol spread? Do you think it's an own at this level? I mean, it's trading at like 12, 13 in the front month.
No, I'm not really. I'm not really focused on the short term. My trading is I'm focused on the end of the year option strikes and of course expiration, because I think that my strategy is pretty simple right now. I try to keep it simple as I can. Is to buy long-term, accumulate long-term, like September, especially December option, and sell the short-term stuff, the short-term maturity, because I think that if you're gonna, before an event, before a vol event, volatility goes up, and sometimes if it goes up too much, you need too much of an event to make it perform. So I don't like to play the short-term stuff. I prefer to sell the short-term stuff and own the long-term stuff because as I told you before, I think that we're going to experience some move and some type of second leg in the second half of this year. So,
and is it always calls that you're playing this through? Like, is it a delta view as well? So you're buying longer dated calls and you're financing them with shorter dated calls?
Yeah, exactly. I like to buy long term calls and fund it with us.
Okay, yeah. I mean, there was a massive buyer of the
4K,
4,000 calls in September last week, right? Like 20 million or something, right?
Yeah, it was crazy. That maybe they know something. So who I am to say.
That didn't move the vol very much though, right? like that's a chunky buyer and yet the vol barely moved in September.
Yeah, that's true. Not sure why, honestly, but there could be several reasons why vol didn't move much. But to me, playing the short term is too difficult because especially because you need the event must be very strong to make vol perform, especially if vol keeps going higher. And I think there is value in the long term, playing the long term. I've been accumulating even before, and right now the price is going down. You have this moment where market is not going anywhere. This is a good time for me to accumulate.
Do you get involved in any of the other alts like Solana or anything like that?
No, not really. I think it's a tough year for us. It's not 2020, it's not 2021, where liquidity was insane, where everything was going up. Solana at this moment, but overall the alts are not performing really well right now. So I prefer to focus on the big two guys, which are Ethereum and Bitcoin. You can do well on altcoin. You can do really, really well, especially if you time. I don't like to sell altcoin volatility because it can be very, very dangerous. And if you
in trouble, if you ask me.
Yeah, really, really, really big. But you on the long side, you can do some really, really crazy things and performance, but you need to be very picky and
selective. I mean, the vols are so high in alts, right? So the problem
is
you're fighting against the theta, and if you don't happen to pick a moment in time where have a run, then you're just burning premium basically. So you be selective about your entry and your timing and stuff. I want to ask you a little bit about protection. Obviously, you're a bull, I'm a bull. Most of the people in this space are bulls, right? And one of the main reasons for using options generally in TradFi, at least, is to protect your holdings, right?
Yeah.
Is that something that you do on a regular basis? Do you use optionality to protect your exposures? How do you think about it? What type of strategies do you like to run to do that?
I have some of my followers that do on a regular basis, and I think it's a good strategy. I personally don't do it much. I don't like to buy puts, to be honest, because it's, sometimes it's, you need to protect what you're doing. But right now, to be honest, I don't see, which can be a very, stupid thing what I say, but I accept it. I don't see a big reason to be concerned in the market. I think that we're still in a, the trend is with us. We are still gonna experience a very good run up. So puts can be seen as a waste of money. I'm in this type of environment. I think that there are, if you wanna protect yourself, sometimes goes into stable or cash. It's an easier way. I don't really like to buy puts, even if they're a very good instrument to protect what you're doing, to protect your to hedge. Your position against the market, and if you spend, that's one of those things that everyone should do. If you spend a little bit of what you're earning, what you're getting from the market in put protection is good. You usually see this premium, evaporate and go away.
Yeah, you have to.
But that's the reason. That's the reason why you're doing it. That's the reason why.
Yeah, the expectation is you're going to lose that money, but
exactly
is to improve your vol-adjusted return.
Exactly. This is something that, to be honest, because I completely honest, something that I not do on a regular basis. Sometimes I do it, sometimes I don't. Yeah. But it's if you are really you want to be more systematic with your trading, that is something that it's good to do.
Yeah, and I think if you're running other people's money, it's also
that's essential. That's essential. I don't touch the other people.
I can understand when you're running your own money, like you kind of like,
exactly.
I don't want to burn premium this month. And I don't feel concerned, so I'm just going to not do it. Exactly. I'm guilty of that as well. I do that quite a lot as well, where I share with my subscribers, like, what is my hedge ratio that I'm running right now? I call it my hedge ratio, right? So I have a certain amount of hedge ratio in my options book against my holdings, because obviously all of my holdings are crypto because it's parked on Deribit, let's say, so therefore crypto margin. So you're like, I either have my crypto margin sitting there and I have no hedge against it, or I have some deltas against it in my options, which create a hedge ratio. And I'm kind of showing people what that hedge ratio is in real time. And a lot of the time, when I've been bullish since last summer, for example, I've been running 0 to even negative hedge ratio.
Exactly.
I've been extra long on top of my holdings.
Exactly.
But there will be times like recently where we tested the lows of the range this week, and I'm like, I'm running no hedge right now, and technically, if we break 60K, there could be a gap to 50.
Yeah. That's.
Do I want to wear that 10,000 point hit on Bitcoin on my entire holdings? Not really. So then it's like, is there a way I can protect myself cheaply, just in case that happens, even though that's not my view, basically? So what I found this week was that there was actually a very muted reaction in put skew.
Yeah, true. Yeah.
So I looked at that and I was like, okay, they're offering me put skew for nothing here.
For nothing, yeah.
And I'd be a bit of a madman not to take that freebie. So I started selling put ratios to basically have very little delta on the put ratio, very little premium spend. But if the market cracks lower by 10,000 points in the next 2 weeks, which I don't think it will, but in case it does, I kick into a load of P&L and that protects my holdings basically. So I do it like that, where sometimes I will react to the market, and if they're giving me a scenario too cheaply, because maybe there are a lot of people who have the same view as you, which is like, I've got no concern, this market's in a bull market, and actually if the market goes down, I'm going to sell puts to buy the dip and take some premium.
And a lot of people did that. And
I think they did, and I think that's why the vol didn't react. And I'm happy to take those puts off them, because I'm not doing it as a naked put trade. I'm doing it as a put ratio trade that spends very little premium, but is owning that downside tail at a price that I think is too cheap, basically, right? So that's kind of how I'm structuring
that makes a lot of sense, and that's the way you want to trade the option. You know, what I'm doing is not necessarily the best thing. It's just that, as you say, me not touching other people's money, I can take this risk. But as you said, it's the way you should take advantage of.
There's different ways of doing it, right?
But as you say, when the market is offering you something for cheap, it's why you should not. You should take it, because you know, if, as you say, we go down 10,000, 10K, it's you know, those puts are gonna perform really well.
I mean, the vol down there, just you know, like, is on a 5 handle, right? So 50 something, right? So like, if we suddenly gap down to 50K, all of a sudden, all the people who didn't expect that are going to get liquidated.
Exactly.
And your vol's going to go to 70, basically, right? So it's like, that's what they're mispricing, right? They're mispricing the conditionality of spot breaking. Vol's not going to be 50 down there when we go down there.
Exactly.
And now it might go to 70, 80. It probably stays there for 2 days or maybe a half a day, and then it gets smashed. That's what tends to happen. But the point being is, there will be an opportunity for you to monetize that protection if you are on it, and if you are alert and you're watching for that. Basically.
Yeah, you will have the time to close those.
That's kind of how I'm thinking about it.
Yeah. No,
That's my trade idea. Like, before we go, have you got any trade idea you want to share with people?
No, I shared a couple of ideas about this Bitcoin for the 28th expiration, June expiration. I say that my idea is that we're not gonna lose the 60K, so a couple of bull put spreads are, you know, for short term. So I said it like a week ago, but to me it makes sense, you know, like I say, sell the 60 and buy the 58. For me, makes sense.
Maturity?
It was end of the month, you know, for this end of the month expiration. I share a lot of trade ideas on my Twitter, so people can check it. My main idea is trade. You know, for me, the trade is Ethereum. That's my trade. That's where I'm putting my chips, and it's pick a maturity like end of the year maturity, December, September.
Like 6 month Ethereum.
Yeah, that's my idea. I don't want to complicate things. You know, short term you can do a lot of things. Short term you can sell. You know, you can do bull put spreads, you can sell calls on the pumps, you can do iron condor if you think that we're going to stay in a range. You can do so many things in the short term. But if you want to, you know, to structure your book around something big, something more solid than just short-term stuff, I think that the trade is. And
you think, what, 4,000 sort of strikes, or would you go higher?
Yeah, I think like something 4,000, 4,500. Those were the strikes where I focus much on my attention. Also, 5K should be okay. And right now, I think it's.
Have you got a target for Ethereum for year end?
No, I prefer to not give a target, because you can. It depends. If we're gonna get the attention that Bitcoin got with the ETF, we're gonna go really, really high. If people will show no interest in Ethereum, those flows will be, really bad. Things are gonna.
What would have to happen for you to dump those calls? So let's say you own a load of long dated calls in Ethereum. What would something shake you out of that position? Or is it a case of you just decide how much premium you want to invest and you just...
No. I just decide how much I want to invest in these calls and see. For now, I'm not really concerned about what it's gonna be for those calls. I need to see. But I think one of those things that I will monitor for sure is that if there will be an instant good reaction with this inflow in the Ethereum. If the interest will be big from the beginning, it's a good sign. Also Ethereum Bitcoin is holding quite well in these hours, so that's another good sign. CME interest is going up. So there are some certain signs that Ethereum can perform well with this ETF approval. But if the flow will be bad, if the tension will start to go down, and so on, you need to be more concerned about your position and readjust the strategy or decide to.
But that's what trading is all about. It's about
that's what trading is all about. You got an idea, you give some, you decide to take a position. You take it, you don't take
chips
it.
on the table.
Exactly. We can talk a lot, but at the end of the day, is you buy, you sell, or you do nothing. That's not matter to do.
Yeah, if you spend too much time doing nothing, don't expect to make any money.
Exactly. At a certain point, you need to act. And I spent too much time doing nothing in the past when I was concerned about this, about that. I was scared that.
Yeah, I think people get scared, don't they, of taking risks. They have a few hits, they have a few knocks, and then they're very tentative after that, right?
And it's human, but
Yeah, but I think the key there is that you've sized it wrong. So if you get into a practice, you got to kind of almost goal seek the size that you're comfortable in. Where, if you take 5 hits in a row, you can stomach it and it's not going to stop you carrying on and putting on more trades and keep doing your process, right?
Yeah.
When you make money off those trades, it's big enough to actually make a difference and you'll actually see enough. You'll see P&L that makes a difference to you. So if you go too big, it's going to make you too tentative when things go wrong. Yeah. And if you go too small, even if you win, you're just not going to make any money.
You're not going to make any money. Yeah, you need to find
that sweet spot of sizing, and that actually is a big part of trading and being successful over time. Is finding that sweet spot of sizing where you can be consistent and you can keep doing it, and you're not going to be phased by those losses because those losses are going to come. You can't.
Yeah, sure. You're going to experience a lot of losses in your trading career, and that's the most difficult part, to find the balance. I learned on my experience that if you can sleep at night, it may sound stupid, but if you can go to bed and not be concerned too much, that's a good sign. So if you go to bed, you have one of your eyes open, that's the problem. You're really, you need to be able to sleep when you're trading. If you're not able to sleep, I know a lot of people that stay up at night because that's happened, especially if you see on crypto Twitter. People go crazy, people buy huge, and then they cannot handle that. And that's
because then they're risking their entire net worth.
That's crazy. You need to this game is. I learned that I'm young. I learned a lot of things, but you need to survive, because if you survive, you have another day to be in the market. If you do not survive, game over. That's it. You're done. You're done.
You don't want to wipe yourself out. All right, man. It's been a pleasure having a chat with you.
As I say, I'm honored to be here, and thank you for inviting me.
That's great, and we'll. Hopefully chat again sometime. Take care.
Yeah, thank you. Bye.
Okay, yeah. So pretty bullish sentiment from Thinking Greeks there. But what do you make of what I was saying about the hedging side of things? Like, even if you're not bearish, the fact that they're not the fact that they're not putting any sort of risk, it seems, on a big downside break, it seems like a bit of a gimme for me to take that.
Well, to put the actual hedge on itself. Yeah.
Yes, you don't buy outright puts. See, the mistake people make is they think the only way to hedge is to go and spend a load of money on puts, and at the bottom of the range, that's just going to be a waste of money if we bounce, right?
Yeah.
And that's what Andrew was kind of saying. Like, it's not about that. It's about when we go down. We're now at this technical break point of 60K or whatever, and we tested it, but we didn't stay below it for long, right? But if we actually close below and we break 60K, the probability of a test of 50K then goes up massively, right? Yeah. And that test could happen in a matter of days. You know what crypto's like, right? It's very technical. Yeah. When it breaks levels, it really shifts quickly to the next level. So if we start to see something like that happen, vol doesn't stay at 50. Vol goes to 70, 80. It doesn't stay there for long. And we see even in the puke that we had on Monday, short dated vol spiked by about 10 points. Give it a day or two, we pop our head back up above 60K, the vol got smacked back down. Yeah. So you blink and you miss it. But the truth is, if you're an active trader, you can capitalize on that, right? So I just feel that the put skew has gone up very, very marginally on the way down here on this test of the lower end of the range. But it hasn't done what we've seen it do in the past, which is really explode higher, because the risk of a break is being priced as quite high. Right. So when they're pricing the risk of a break really high, it's quite expensive to play that break, or it's quite expensive to own that left tail. But when they barely budge the skew, and the skew's still quite flat on the way down, you know, you can sell slightly out of the money puts and then buy multiples of deeper out of the money puts. You do it for close to no premium. If the market rallies, you didn't really spend anything. If the market breaks in the next 2 weeks, which is kind of your risk zone, let's say, of time, then you'll get to monetize that protection, right? That's the idea.
Yeah, and this is like the whole point of this podcast, right? Is to be thinking around stuff like that, because it's not just about, you know, we're all probably pretty bullish, you know, on the long term outlook, but it's like how do you play that and monetize it? And cash is king as well, right? Like, you know, we also buy the dip. Well, a lot of us are all in crypto anyway. So,
yeah, we've got no money to buy it.
What are we going to buy it with? So then how do you find ways to give yourself some sort of dry powder to buy the dip? Well, if you can basically put on hedges for pretty much zero that are actually going to monetize on the flush outs, and then you can monetize them, and then there's your cash to buy the dip and probably then start sticking on some top side. And
you know, I'm not saying it's free money, right? Let's be very clear.
Yeah.
There's no such thing as free money in markets, right? I'm just saying, versus what my expectations would have been for the skew to reprice on the way down like this, it hasn't done it. So, you know, there are scenarios where you do the trade that I'm suggesting and the market grinds its way down and you don't make any money. And you're like, well, that was supposed to protect me from a downside move and it didn't. Your protection is for a fast move in the next 1 or 2 weeks where vol explodes, basically. That's what you're getting. You're getting to participate in that scenario very cheaply, right? But you have to, that's why you have to understand and get some education around these option structures so you know exactly what you're playing for.
Yeah, and what kind of term do you do it? 1 month? Or,
yeah, July, just the exclusive term. Because you see like how crypto vol moves, the 20, 30 point moves in vol, they're not happening in like 3 to 6 month buckets, right? They're happening in the front end.
Yeah,
right?
yeah.
So ideally what you want is you want to own the 1 month stuff, the flush out happens and that becomes a 1 to 2 week option in 1 to 2 weeks time.
Yeah.
And then that 1 to 2 week vol's trading at like 70 or 80 basically, and then you monetize it all, right?
Yeah.
That's why you need to use the front end. But the risk with using the front end as well is that the decay profile isn't that great.
Yeah.
So you kind of, there's like this sweet spot where if it gets within 1 to 2 weeks of expiry, you probably don't want that position. You need to roll it, right? But when it's about a month away, it's kind of giving you the optimal Greeks that you do want, right?
Yeah.
So yeah, it's a bit technical.
Yeah. I mean, yeah, I say it feels like we, I say, my bias would be that we've probably sort of seen the lows and that flush kind of happened and actually obviously kind of met with decent demand.
Well, that's what the market is pricing.
And perhaps, and then the flip side to that is that's why it is cheap to put the hedge on for that down, like for a bigger downside flush.
I think the market agrees with you.
Yeah.
I like taking the other side of that when the market's like just giving me something that's so cheap and it's like
100%.
Because I'm long. It's not like I'm not long. I've been pretty vocal about being long Ethereum. I'm actually short put spreads in Ethereum to try and play the outperformance of Ethereum, and they've held in okay, right? They've done all right. Obviously, we look like Thinking Greeks was saying we would like to see a move higher next week when the Ethereum launch actually happens, when the ETFs happen.
Yeah. And the other obviously interesting Thinking Greeks is kind of in line with our thinking on ETH. So there's some catalysts there, right? Coming. Yeah,
I mean the fact that we saw massive 20 million premium purchases of 44,000 calls in September last week, right?
Yeah.
And that's in the face of the market drifting lower, right?
Yeah.
It just shows you what people think about this.
And ETH's kind of held in pretty well as well. So like given like the kind of flush we've seen in Bitcoin and stuff.
Yeah, I mean it's not often that we see ETH Bitcoin cross trading up whilst the crypto market's trading down.
Yeah.
Right.
Yeah.
And that's what we've seen. So it's creeping back up to the highs that it made recently. And next week's the prime time for that high to break, basically.
Maybe as well, mate. Maybe it's sniffing out alt season. Maybe we're finally going to get our alt season.
Maybe
as we go into the your mate Raoul Powell, the banana zone.
Yeah,
maybe it's coming, and it probably is coming.
We'll get Raoul on once the banana zone starts. I think we'll get him on.
That'll be fun. That'll be good.
All right, guys, we'll call it a day for this one. Thanks for watching. Don't forget to like, subscribe to the channel. No giveaway this week. We're probably going to do them maybe once a month, but look out for that, and we'll catch you all next week.